The US has been downgraded, France has followed suit, and at the same time, Indonesia is being upgraded, and it's looking good. Ladies and gentlemen, we are very honored to have with us today Pak Gita Wirjawan, Trade Minister of Indonesia. Ladies and gentlemen, Pak Wirjawan.
First of all, thank you very much for the opportunity to spend a few minutes, and I'm being clocked here. So I'll spend 20 minutes to try to talk about Indonesia in the context of now and where it may be in the future. And I'll try to peel it a little bit more, talking about investments and trade, which I cover. I have been the chairman of the investment board for a little over 2 years, and I've just been moved to the trade portfolio, and I still cover the investment. Kishore was talking about a few things that I think bear a lot of relevance to Indonesia and Indonesians. He did mention about resource, and going by a number of the analysts and their pontification into the future, I think we all know that, at the rate that China has been consuming 30-40% of the global commodities and resource, and they're representing only a tenth of the global GDP, there was always bound to be a correction. And the question that lingers amongst many of us is whether or not the growth that takes place in the other developing economies, such as India, Russia, Brazil, South Africa, the other members of BRICS, and Indonesia could make up for the potential correction. The answer is no, unequivocally. And as the correction on commodities prices, if it does continue to take place, that may be good for other developing economies, including resource-producing countries like Indonesia. Indonesia's been known for all its bad things for so long. I remember the time when I was still a banker in 1998. My salary was in rupiah at that time, and it dropped by 85% in 2 weeks. Didn't know what to tell my wife and kids, and interest rates and inflation were at 70% or a little above that. Politically and economically, we were moribund. But somehow, by fluke or by design, we've turned this ocean liner around in a big way. In hindsight, we couldn't believe how we've turned it around. If we take a look at the politics, there's, I think, a lot more political stability now in the country, and there's a lot more political decentralization, which a lot of people doubted some years ago as to whether or not it was going to work, but it seems to have worked. And fiscally speaking, it has decentralized. More than 50% of the budget is decentralized to the 33 provinces. And our debt to GDP ratio has dropped to 24% last year. And at the rate that we don't like to borrow, we may just go below 20% by the year 2014, and that's only 3 years away, or 2 years away. And we may become a net foreign currency creditor in 2 years' time also. So this is a little different from how things were maybe 5, 6, 7, or even 14 years ago. And monetarily, as I've said before in many other occasions, our ability to manage inflation has been pretty good. Inflation was kept at 3.79% last year, and our first quarter this year was a mere 4.5%, while being able to maintain growth at 6.3%, although it's lower than whatever we said we were going to achieve, which was around 6.5 to 6.7. I think what has helped Indonesia is that we were forced to do things that we didn't like, and we had no choice. With everything that we're seeing now in Europe, the lack of decisiveness from a fiscal and also to some extent monetary standpoint is unlike what we went through. 14 years ago. And I think if we were to project this forward, it may turn out even sexier going forward, as long as we do the right stuff. And the right stuff is really fixing the soft infrastructure. Kishore is a master in the educational domain. As you know, Indonesia only has fewer than 20,000 PhDs compared to the 500,000 in China and more than 500,000 in India. And we're only producing 800 to 900 PhDs a year, and that's staggeringly low. And with that sort of a figure, we're probably not going to be able to compete with neighboring countries. But we are taking the view, and as a result of the increasing fiscal space, we're going to be able to spend a lot more money on a lot of things, including education. We've just concocted a master plan which basically details a few things, one of which is that by the year 2025, we should have about 18 million bachelor's degrees and about 160,000 PhDs, hopefully in non-religious subjects. I don't mean that as a joke, by the way, it's serious. And correspondingly in other fields and levels, whether it's the masters and all the way down to the polytechnics and the plumbers. I think the industrialization gig has started, and it's started by way of investments. We have announced our investments for the first quarter. They went up by 32.8% vis-a-vis the same quarter in 2011. This is good and a little better than most countries. And if any, I think one of the striking things about investments, to me, is that the deployment of capital into areas outside the island of Java has been, I think, pretty significant. If we take a look just back to 2009, the deployment of capital to outside Java was only 18% of total capital formation. 18%. Which means that everybody just wants to be in Java, where there's about 130 million people out of the 250. But in the first quarter that we announced, the percentage has gone up dramatically to 47%. And last year alone, it was 41%. So 41% of capital formation took place outside the island of Java in 2011, and the first quarter of 2012, 47%. This is good, because money is finally going out to the regions as much as we want to keep only 17,000 islands together. By the way, that's when it's low tide. When it's high tide, it's fewer. If we can get our act together in terms of reinvesting this money and utilizing the fiscal space for the purpose of the soft infrastructure, primarily education, then follow it up with healthcare and the hard stuff, the roads, the railroads, the ports, the airports, and everything else, including the power generation. I think we can get there. When I talk to investors, you know, they always tell me the CNN version of the stories, whereby, you know, people remember Indonesia when there's a kid starving on the streets, or when there's demonstrators burning the flags in support of democracy, or when there's a government official being tried for corruption. And that's the image that people in Oklahoma have about Indonesia. But I think if you take a 5, 10, 15, even 20-year view, it's pretty damn sexy. This is a $1 trillion economy. The Economist has just labeled it as the Komodo economy. Komodo is the lizards that live in one of the islands in Indonesia. Komodo in a sense that it's underrated, it's thick-skinned, it's buoyant, it's quick. You know, by way of the 2008 crisis, we grew at 4.5% in 2009, and we were able to ramp that up to over 6% in 2010, and 6.5% in 2011, and hopefully this year we'll be able to maintain between 6.5 to 6.7%. Domestic consumption has been the propeller for our economic growth. 60% of our GDP is related to domestic consumption, and exports only make up 26% of the GDP. If you total all trade, they make up about 50% of the GDP. So in a way it's bad, but in a lot of ways it's good when things don't fare well in other parts of the world, to the extent that we can somewhat insulate ourselves from externalities. Now the key is for us to boost and ramp up that export figure, not by way of volume, but hopefully by way of value added. And I think you can anticipate policies going forward which will hopefully induce and encourage Indonesia and Indonesians to climb up the value chain. We have basically gone ahead with some different fiscal policies which would provide tax holidays for anybody that would invest in Indonesia that's innovative, job creating, and would develop certain parts of the country that are remote and beyond Java. And it's happening. The Koreans are coming big time. There's about $25 to $30 billion worth of investments from Korea in the pipeline. They're making the biggest steel factory in Indonesia, 6 million ton capacity. And they're building, a number of petrochemical complexes, tire making capacities. Yes, all this not just for the purpose of domestic consumption, but hopefully with a bonus beyond which we can start exporting things that are a bit of value added for ourselves. Now, the last bit is trade. Trade, I think, has been slow for the world. Every time I go and show up at the WTO meetings, as much as everybody's rhetoric is about multilateralism, but bilateralism and regionalism are taking place with a vengeance in many places, whether it's in the US and surrounding, Europe and surrounding, even Asia or Southeast Asia and surrounding. And that's, I think, a natural phenomenon by way of people not being sure about the Doha Rounds, not being sure about whether or not multilateralism. And I look at it as, I always use the metaphor, there's this 159 cars that are trying to get, or 159 people that are trying to get to Davos from Geneva, and most of them don't have, or many of them don't have GPS capabilities, and some have. And there's 2 or 3 guys that can afford chopper rides. And these 2 to 3 guys that can fly on helicopters, they're saying, look, let's wait it out. Let's just wait till the storms pass. So as the guys without the GPS capabilities move on, they get lost, they accidentally meet up in some Starbucks in Gloucester and try to cut their own deals. Bilateralism is good, but it's not good. It's not good because it doesn't abide by the principle of multilateralism, and that is the principle of single undertaking. Nothing is agreed until everything or everyone agrees. And bilateralism tends to entail one guy winning more than the other guy, typically. And this is, I think, as a result of the economic realities that we see in some parts of the world. But I'm an optimist, coming from a country that was banished or written off with $1 trillion economy and potentially $3 to $4 trillion in 8 years, and according to Standard Chartered and Nouriel Roubini, it's likely to be at $9 trillion by 2030. Waiting for 3 to 4 years until the storms pass. Hopefully there's not too much of kicking the can down the road. I think Doha Rounds have oxygen. As long as we wait and start out with the low-hanging fruits, such as the LDC package, the least developed countries package, so that we can send a signal to the poor countries in Africa and some parts of Asia that it's got meat. And that, I think, will give traction to Doha Round. So net-net, this is the world, and as much as people have been very, very busy talking about China and India, you know about India better than I do. The politics is messier than it is in Indonesia today. And China is trying to reconfigure itself from an export-centric economy to a consumption-centric. But the question that lingers in my mind is, how are they going to be able to do that quickly if the demographics don't help? Indonesia's demographics, I think, are a little bit better. And that's a mistake that we've had for long. That is, we like to reproduce. We'll be hitting the sweet spot every day for the next 15 years to the extent that 60% of our population will be younger than 39 years old, 15 years from today. And 50% of the population will be younger than 29 years old. So think about it. You've got all these young people in Indonesia and staying youthful for the next 15 years. I think we can rest assured that they will be consuming all the time, a lot more than the elder guys. So we just got to make sure that we pump the vitamins in the pipe so that they get better protein, better vitamins, better education, and all that. And it's already reflected in the social media. Indonesia is the second biggest users of Facebook. That's probably one of the reasons why the recent IPO got more than 100 billion valuation. And I think in the next few years, we could be the biggest Facebook users. We're the third largest Twitters in the world, but in terms of penetration, we're already the largest, with a country that has a broadband penetration rate less than 10%. And that, I think, should tell us, at least it tells me, that the mobile telephony has allowed us to circumvent the impediments of broadband technology. So here is a means, or a pipe, that allows millions of people in Indonesia to get educated, to get smarter, which I think will be in line with the industrialization that we want to do. But at the moment, we can't be making iPads, we can't be shooting rockets or whatever, because we have a very limited number. But when I talk to investors, they get it. They're not taking a 6-month view of the country. When they want to build a factory, they're willing and ready to take a 5, 10, 15-year view of a country, and they have. And as a result of which, we're able to get investments more than ever. But I think there are risks, though. The risks would be bomb explosions, political explosions, natural disasters, tsunamis, earthquakes, mud flows, and you name it. Those are risks that are inherent within the system. And there is also a risk in that we won't be able to get educated more than ever. But put all that back in the fiscal posture, in the monetary posture. Anybody here know how many people pay taxes in Indonesia? Only 10 million. We have, I think, a little more than 10 million people in the country. Only 10 million people pay taxes. And with that, publicly listed companies already pay 20% tax rates, slightly better than Europe. And we're able to give tax holidays. And we're able to basically maintain only a 12.79% tax ratio. If we get just 25 million people to pay taxes, there's no doubt in my mind that we could have the most competitive tax rates in Asia, better than Hong Kong's or even Singapore's. And that's the kind of possibility that the fiscal scenario Indonesia is presented with. So all it takes is for that to be enhanced and embellished in the next 5, 10 years is that you just need to make sure that there is political continuity in Indonesia, which I think will arise, the question of the political continuity in the next year or two, especially when we have the elections in 2014. So, in a nutshell, that's Indonesia. Thank you very much.
Thank you very much. Thank you very much, Pak Gita. We would like to open the floor for questions. Over there.
Good afternoon. Could you explain the recent introduction of new taxes for your mineral exports, the logic of that?
We came out with a mining law in December of 2009, which basically has the spirit of everything getting downstream by the end of 2014, in 5 years. And when we did a pulse check on the ground, not much has happened in the last 2.5 years. So we want to make sure that the downstreaming does take place. And we were careful. I think a lot of this got lost in the translation, in that we were careful in carving it out in the sense that we didn't want to touch anything that is susceptible to the contract of work, which has been signed by a number of companies, local and non-local, which have fiscal obligations. And we were also careful in basically making sure that anything that's already been exposed to domestic market obligations should not be imposed anymore. But the reality is there's still a lot of commodities in Indonesia, minerals, that haven't gone through any bit of downstreaming, whether it's smelting or anything. So this was basically the spirit that the Mines and Energy Minister wanted to convey, that, look, I think we've got to be ready by 2014, and we told everybody in 2009 that, you have 5 years to get this thing done. And I think the other stuff that makes it difficult is that, there's a lot of people who want the status quo of just exporting raw materials as raw as possible without being mindful of the messaging that we've been trying to do over and over again, that we want to climb up the value chain. And I think, we've got to draw the line here in that people have to be sensitive to where we want to be. I certainly don't want my kids to be selling coal, nor just palm oil. I think if they could be selling oleochemicals or, build power transmissions or power generation capabilities, I think that would be better. Yeah.
Any more questions? Over there.
If you look at the success story of Japan and its investments in Thailand, ongoing investments even post the floods, how would you compare where you are, Indonesia is, with regard to the sort of commitment that you referred to, perhaps with regard to Korea and other countries investing?
Sorry, what was the first part on Japan?
If you look at Thailand, Japan's been a major factor. So I think Thailand, even though politically they're not particularly strong themselves, with so many governments in the past few years, but Indonesia's had a bit of a sort of a late start, if you like, as to what you referred to, and then you referred to Korea. So I just wanted to get a feel for how this latent success story may manifest itself.
Look, I was with the chairman of Toyota just a couple of weeks or 3 weeks ago. He showed me a chart which shocked me. Indonesia is already the fourth largest market for Toyota. First one being China, second one being the US, third being Japan, and Indonesia being the largest. And Toyota, I think the last couple of years have invested, I'm guessing, around $500 million US. And he basically told me, and probably others in the government, that they're going to build more capacity in Indonesia. And this is not a zero-sum game with Thailand. I don't see it that way. I think the important thing is here's a country with 250 million people, 50 million of which are middle-class members, with GDP per capita on a purchasing power parity basis of around $9,000 to $10,000. As compared to the average Indonesian GDP per capita on a PPP adjusted of about 4,005, nominal 3,005. We've been very bad in building infrastructure for a long time, but we finally got the land law out on the 16th of December, and that's something that was pending for 25 years, We finally got it out. And we're in the midst of, or at the tail end of, finalizing the presidential decree, which will detail out the mechanism on pricing and timing for anybody to clear land, which I think will unleash significant value. I think the Japanese and the Koreans and many others are watching this, because as soon as we get our act together on this presidential decree, building infrastructure will be a lot easier. And as bad as it is, I don't know, many of you have been to Indonesia, the traffic jam is horrendous. It's worse than that in Bangkok and worse than that in Manila. We sold 800,000 cars last year with poor quality roads and very slow progress on infrastructure development. We sold 8 million motorcycles. But I think our ability to build roads, and it's never been a question of money. There's a lot of money waiting to go into infrastructure and everything else that will sit, on the sides of the roads. It's a question of regulatory framework. And I think this will make it easier for people to understand Indonesia. And I think the presidential decree, when it comes out, it will certainly unleash value. And the Japanese and the Koreans are looking at this, and they're betting on it. Our steel consumption is only 30 kilograms per capita per year. Koreans, they consume about 1,200 kilograms of steel per capita per year. I go by the definition of a modern nation being one that consumes steel at about 500 kilograms per capita per year. So if we want to go from 30 kilograms to 500 kilograms, we've got to build at least 120 million tons capacity. And as soon as I talked about this to the Japanese and the Koreans and others, the Koreans immediately said, okay, we're going to invest $6 billion US in Chilegon, POSCO, that is the third largest steel maker in the world. So with steel comes everything else, including cars, motorcycles, ships, airplanes, and all that. So anybody that wants to believe in the Indonesia story with some, error, you take a 20-year view of the country, starting with 800 billion in 2010 until 9 trillion in 2030, you accumulate all that. The economic pie is $60 trillion. So if you go by what has taken place in the past, if 60% relates to consumption, if you want to be in the consumer business, right there, there's $36 trillion worth of business in the next 20 years. If you want to be an investor, 30% of the GDP is fixed capital formation. And that's $18 trillion in the next 20-year period. If you want to be a trader, trade accounts for 50% of the GDP. There's $30 trillion of economic pie. All that will need cars, motorcycles, roads, power generation, and all that. So, I think it's got some water.
Thank you very much. We maybe have one more question.
What assurances can investors have on currency stability, exchange rate, lack of exchange rate controls?
Where's the question? Can you raise your hand?
Okay, sorry. What's on the stability of the exchange rate?
Right.
Look, we almost got away with passing a law to increase fuel price, right, on the 1st of May, but we didn't because we put conditionality on it. There has to be a 15% increase in oil price in a 6-month period. With that, there was a built-in inflation expectation, as a result of which people stock up and all that, and you have seen a depreciation of rupiah a little bit to 9,300 from 9,100. I think if oil price were to continue stabilizing at where it is today or even come down, then you may see a possibility of a reversal. So if not stabilization of the rupiah. But if the expectation of inflation stays on, then I think you may see further depreciation I'm more of the half full glass school of thought, in that I think commodities prices will stabilize, and that will help real interest rates in Indonesia to come up a little bit, and that will attract. I'm in constant communication with people at the World Bank. I think the tail end of the government bonds, especially the 10-year duration, has to, remain a little bit more untightened as to attract more foreign direct investment, and that will, I think, help get rupiah to where it should be. And you all know that the portfolio investors and the real investors talk to each other, and if that were to happen, I think if any Indonesian rupiah, in my commonsensical view, should mirror more the renminbi as opposed to the dollar. Because if you look at the intra-trade or intra-economic activities within Asia, China is already our biggest partner, trading partner, 60 billion US. China's version, our version is 50 billion US. That number is going to go out to 80 to 90 billion in the next 3 years. So the more intra-ASEAN, intra-Asian trade there will be, I think, the more likely Asian currency will mirror other Asian currencies. And depending on what sort of a view you take with the renminbi, I tend to think that there is likely to be more appreciation. Then I think rupiah will probably follow suit to some extent.
Thank you very much. Thank you very much.
Unless there's a bomb explosion.
Thank you very much.
Thanks.
Very much.